Let's just do this, man.
I've been experimenting with different intros to get into the videos, and I find that when you just come into the middle of the conversation,
Yeah. Imagine like there's a conversation in the living room and somebody walks in like and like, "Hey guys, so today we like."
First of all, welcome to the channel. Welcome to Freelancer Finance.
yeah,
Thanks for
Big
joining
fan
us.
of your breakdown. The evaluation of, I think it was one channel evaluating Tesla. It was very analytical the way you did it. Very professional, not emotional, and you took it apart. I absolutely loved it.
For the people who don't know you, I'm sure everybody knows you on our channel, but what is your history? Well, who is Tom Nash? Who is that person?
You know what I get a lot because I have like Tom Nash is not my real name.
Oh.
So I have a LinkedIn profile under this name, which is like a fake ass LinkedIn profile. And like everybody who tries to expose me, like, oh, we exposed Tom Nash. His LinkedIn profile shows no professional experience. One time I had to actually show like my entire like real link. I had to dox myself and show my entire like real LinkedIn to CoffeeZilla because like there was a big thing coming out. Like
Oh,
people just
CoffeeZilla.
got conspiracy started out. So he like made a whole thread confirming like my background because I don't want people to know my real name because I mean honestly it's scary. People are psychos.
What did you do before all of this YouTube stuff?
So I was doing YouTube for years, a variety of different channels. As far as professional life, so I worked overseas as an attorney, and then I got into and also so I did the overseas like a equivalent of a JD and then an MBA, and then I got into the University of Michigan. I did masters in international taxation, University of Michigan, and then I started working for a big bank in the US, which was an investment bank, but I worked for their alternative investments fund, which was a French-based fund, but our office was in the US. So I've never said this before, but it's a fund called Lixor Asset Management, LYXOR. So I work for them for it's a big fund, but they're a European fund, and we were kind of the US pilot of it.
What's in the fund?
The fund belongs to Societe Generale. It's the French investment bank. What it does, essentially, what it did, at least when I was there, is that we were focused on investing in kind of a fund of fund structure. So we would seek out money managers that we thought would be a good fit, and we would invest with them. So not specifically into portfolios, but rather in other funds that we thought which were more kind of categorized. So if it's a distressed assets fund, or if it's a tech, or if it's et cetera, et cetera, et cetera. For the most part, when I was there, it was a really great learning experience. What I absolutely loved about this was that I really got exposed for the first time to US compliance and legal implementation of what securities law looks like in the real world, which was insane. And we were like an exempt fund, and then even I just saw the amount of work that goes into being an exempt fund. From there, I basically went and I worked for one of the big four accounting firms. I'm not going to say which because this is already going to get me doxxed, but you know the four: KPMG, EY, PwC, Deloitte. So one of these. And eventually I started off as a senior analyst and grew my way all the way to senior manager, and I managed a big team. In my time, I worked with Amazon, with Google, with Apple, you name it. Like we work with all the big ones.
Were you actually an analyst on anything? Because I see you do DCFs on your channel and stuff. Were you actually a stock analyst, or it doesn't seem like you were a stock analyst though?
No, it's not stock analysis, it's company analysis. The idea is you're trying to put a number on the company, saying, okay, with everything that we're seeing here, the risks, the exposures, the cash flow, the growth prospectus, whatnot. So this is the number that the company is worth. It's way more applicable to a private company when you're actually trying to realize the value of a business. It's not a good metric for public companies because there's a lot of crowd psychology involved in the pricing of these shares. Doing a DCF for a public company, it's like saying what the company should be worth.
Can you give an example with a company that people would know watching this?
Tesla is actually a decent company to do DCFs on, even though they're public, because of how insanely efficient the stock market is with Tesla. Everything gets priced in immediately, even in advance. So you would come in and you say, okay, so this is the margin per vehicle, right? And this is the card capacity. So they're making, when I did the DCF, they're making 500,000 vehicles, right? So 500,000 vehicles, and then you look at the industry margin, look at their margins, you analyze why their margin is so much better and how much it would be once they get to 3, 4, 5 million. You try to see if the demand will still, what's the TAM, and then you look at the cost of capital of these 5, 6 years, whatever it may be, and you look at what the tax rate, like for example, for a long time there, we didn't know which tax rates to utilize in these DCFs because they're about to raise the tax rate to 28%, the corporate tax rate. So you try to kind of factor that in. What would be the interest rate? When I was doing my DCFs, I always use a 10% interest for weighted average cost of capital for WACC. And people will say, "Oh, you crazy? Like the interest rate is zero. Why are you so over conservative?" And I told them, "You're looking 5 years into the future. You never know." Like
Right.
the problem is, and here's the problem. So you can do the best DCF, but then there's such a hype about a company, and it can stay for a long time. Or there's flip side. There can be a lot of negativity. Palantir Tesla is prime examples of this. Tesla holds its value really well because there's a lot of Rob Maurers in the community. There's a lot of like professional finance people who show these numbers. The community gets a lot of information, so the price is very efficient. And then on the other cases, like Justin, the guy I do money talks with, we agree. Like Palantir is like, and he used to work for Citadel, by the way, as an analyst. We both agree that Palantir is
Evil
like
Empire.
Yeah,
Yeah.
it's a $22 stock, $23 stock, and then it get priced so low because of crowd psychology and fears. And also the other thing is also macro, which you cannot factor into DCF. Like for example, if Warren Buffett wants to buy a business, the macroeconomics apart from the cost of capital are irrelevant. But if it's a public company, then there can be a rotation cycle like we have now from growth to value, which is not just the cost of capital going up, is the entire growth sector is the multiples are shrinking. So you cannot factor this into DCF. That's why I stopped doing DCFs for public companies. It's not a good metric.
So a question to this: how are we supposed to value as investors then? If you're saying DCFs are useless, and I've talked to other brokers.
No, they're
by
not
the way.
useless. They're problematic, I would say.
Yeah, but there's so much inherent in the assumptions that, just like you mentioned, knowing the interest rate in the future, knowing the cost of capital, knowing all of these things,
assuming the growth.
Right, certain growth assumptions. So there's all these problems that it still seems like you're just throwing a dart at a board because you really don't know the answer.
You are, but for some companies it's easier. Like let's say you're trying to do a DCF on Coca-Cola or Dairy Queen or one of the.
They have 30 years, 40 years, 50
right,
years.
There's a long track record.
Super easy. Yeah, you can see exactly where they're headed.
Right.
It's very simple. When you're trying to evaluate a tech startup or a growth company in this volatile market, it's just too crazy. The way you value companies right now is like you value real estate in a way. This is the most, like, there's really nowhere to hide because you basically have to be very mindful of what multiples are looking like in the market. So it becomes much more of a, what's the acceptable multiple for a company of this of this type, of this sort. And like, when you're trying to get a house in the neighborhood, so how do you know? You don't calculate the cost of the bricks and the cost of the labor. You say, okay, how much this house was sold for, how much this house. You look at the neighborhood and then you figure out, okay, so this one has an extra parking, this one has a warehouse, this one has a basement, and then you kind of calculate the price. That's like, in this crazy volatile market, it's a delicate balance because you have to balance out the story with the fundamentals, and it's really hard sometimes. Investing in tech without understanding the story, you're gonna, and vice versa, just going for the story and not looking at the fundamentals, you're also gonna get screwed. So you need to be kind of a unicorn to be able to look at both and balance them out efficiently.
Well, I think it's a good transition just to Palantir.
Yeah.
Yes,
So
the most lied about stock in the stock market.
Well,
We have
let's
some
set it up.
questions.
So you are obviously a bull on Palantir, and
Super bull.
Palantir has
Yes.
gone. The highs were in the 30s, but everyone thought it
Even
was valued,
40s. No, but 40s was
even 40s.
no. But what happened is, like, there was a time where Wall Street bets were pushing it
Right.
in the height of the pandemic, so they took it all the way to 40. These idiots.
And I remember you did do a DCF. I will bring this up. Maybe we'll link to it. But you said it's
I said
valued somewhere
20.
in the 20s, right? Somewhere in the 20s.
25, right?
And now we're sitting at around $6. So,
And people show my thumbnail with the $500 clickbait thumbnail.
and we will
It's a
too.
$500 stock.
So I don't know if you want to go into any of
that.
that and
Well,
maybe get into,
Palantir.
I said it could be.
It's one of those
Like
stocks
they,
where we have tried to get, that's how we met a mint. We met a mint because we were literally trying to understand this guy Karp
Yeah.
as much as possible. And I just
okay,
can't say I fully understand this. Like my question,
nobody understands him.
my question would be like, it's really easy, right? To explain if someone asks you like, what's Tesla worth? You can just ask them a question. You can say, well, do you think that there'll be more EVs on the road in 10 years than today? And people go, oh,
And you
shit,
can
I
sit
get
in
it.
a Tesla. You can actually drive in a Tesla.
Right. So what is the equivalent of that for Palantir? Like when is the moment when all of retail and all the institutions, they just get it and they go, oh my God, this is way undervalued and we get the moonshot. Like what is the catalyst and like when does that happen time frame wise?
I don't
Silence.
know if ever this happens. No, it's just I'm thinking of. I don't know if this ever happens. I don't know when, if at all, they'll have a consumer product or anything resembling consumer product. I hope that this day comes and that would be easier for people to feel the actual solution. But even if you don't, it's a very simple math. Let's look at the numbers, okay? And this is one of the most, I think, critical points about this. I'm very critical of Karp and management as far as presentation goes. I think their presentations have been god awful in the past 2 quarters, 3 quarters. This was just abomination. It's just so unprofessional. Like they always say, "Oh, we're not good salesmen." Oh, we know. We know.
We're trying. We're literally trying to understand these.
Oh man. And by the
Nobody
way, I sold
understands
my
what he's saying,
position.
bro.
I sold my position at 11.12. Just
No
that
problem.
I did that.
So
He's like, it's okay.
here's the thing. Alex Karp, he has this problem when people ask him a very specific question about, like, you can ask him about, oh, what do you think your margins will be next year? And he'll go to, and the answer will be about German philosophy, bro. It's like,
Yes. We had a video
And
when
it's-
we did it. It was like trying to get him to
like,
answer.
no, my guy, this is not the way. This is not the way. This is like Mandalorian correlation -1. This is not the way. And so you have him. He's very like, he's a genius, but I mean, he will not give you a coherent answer about anything, which is something I just can't with. Because like Elon is eccentric, but he gives precise answers. You're gonna get exactly that. Might take him a while. He might pause and think. He might go like in the loop, but he understands the question. He'll get like with Alex Karp, like you'll get this explanation. And he's like, I don't understand what you're saying, my guy. And on the other end of the spectrum, we have Sham, who's the COO, and he just sounds like a car salesman, and he just reads the page of all the like script, and he just would not, and that just creates this cluster of cacophonic sounds that make no sense, and then people get frustrated. Now, I don't think that the share price tanking had anything to do with the awful presentation, because Wall Street doesn't price stock based on the quality of presentation. I think they just pissed off a lot of investors. I think the reason why it dropped is because of a few things. The main thing that people seem to misunderstand about Palantir is this whole issue of gap profitability. So for those who are not familiar, like gap profitability is generally accepted accounting principles, is how basically you measure stuff in the company. When do you recognize profit, even though you haven't received the cash? Or which kind of expenses are you allowed to deduct, et cetera, et cetera. There's a whole set of rules of, I can go into this deep dive about this, but it's going to make people fall asleep. But essentially there's rules how you represent your business in a numeric fashion in your statements, okay? And it's not always cash flow based. In fact, most of it is not cash flow based. So I'll give you an example, right? Carlos, let's say that you and I make a transaction and you're a company and I'm your customer. And then we just signed a deal for $1 million worth of services, which you're supposed to provide to me, and I'm going to pay you at the end of the services. At which point are you allowed to say, oh, my earnings is $1 million? It's a good question, right? So people look at Palantir, they say, oh, this company is not GAAP profitable and their margins is awful. And the problem is that what they're seeing is this distorted picture of how the company is operationally profitable. So in 2021, Palantir generated revenues of $1.5 billion. Its free cash flow, just operational free cash flow, was 424 million. So almost 30% of free cash flow on 2021. And then you look at the financials, and the financials say, oh, negative operating margin. because in Gap, what you do if you have employee stock options in the company, the IRS would allow you to take this as a expense. It's a benefit.
As a loss, right? Okay.
It's a loss that you want because this is how you make 424 million on 1.5 billion and pay no taxes. So it's a benefit. The IRS allows you to view these options that they granted employees as expenses and basically reducing your taxable income, even though cash flow wise you're in 30% profit. Like, my guy, this is how literally every software business works in the world. I mean, there's no job you can get in software, in tech, without stock options. I mean, it's just, it doesn't, even not in tech, in any company, like, unless you're going to work for like a Warren Buffett level type of, like a Dairy Queen or Coca-Cola, if you're going into even Tesla now, like every company gives out ESOP, employee stock options. It's standard practice.
Well, I want to fight back before you go on. The problem is, I think they were diluting heavier, and I agree with you. All growth companies do this.
It's a lie, and I'll show you. It's a lie. So basically,
didn't they increase share count almost by double in the last couple of years?
More than double, but that all happened before the DPO. Trust me, there's nobody who knows more about Palantir about me and Alex Karp. There's the two people in the world who know more about. I can quote these numbers.
And we only understand one of those.
Yeah, right. So you translate it.
Alex, if you're watching this, hire me. I'll do your fucking
translate them into English.
Yeah. Tell them I don't like German philosophy.
It's not even the English. Translate it to human. I don't understand what you're saying, my guy. You know, they offered me an interview a few months ago, and then Sham Sankar did the call, and I went berserk on him, and then they never called me back about the interview.
Oh man!
So I think it's gone.
First, you get the
opportunity
interview.
is gone.
Yeah,
Yes.
you
get the interview, and then yeah, like we got you. Now we can knock you down after.
I'm not gonna sugarcoat anything. People's like, oh, Tom is a cheerleader. No, you know how many people at Palantir hate me? Like Sham hates me, bro, because and now I'm sure Alex doesn't like me, but it is what it is. They should not be doing this. So Palantir, circa 2019 had 600 million shares. Okay, Palantir today has 2.2 billion shares. It's more than double. In fact, it's much more than double. Look at the insane multiple. So what people don't understand, they look at this, oh my God, they're diluting. They're like, no. What happened is that essentially before the company went public, they went up to 1.75 billion shares. It was essentially a split, if you really think about it. It's not only, I wouldn't say just a split, because there are a lot of stock options that were granted in this time, a lot of benefits, et cetera, et cetera, et cetera. But they got to 1.75 billion shares before the DPO, because in the DPO, the shareholders create the market. They're the market makers. There's no banks. There's no, it's not an IPO. So you have to have liquidity. You have to have available shares to actually put in the market, because in a direct public offering, it's the existing shareholders selling their shares. There's no banks. There's no underwriters, et cetera, et cetera, et cetera. And in the context of what happened in this time, which is, again, people just lie about this constantly. During this time, two things happen, which again, people don't understand. Number one, Palantir created a whole brand new sales force that did not exist. I mean, hundreds of people. They had no salespeople. It's a stupid idea, but when you're a government contractor, it's really easy not to have salespeople, because selling to a government is very different than selling enterprise software is fucking brutal. It's a jungle, bro. It's an insane world.
Aren't they just like government? Bidding? They're all just like bidding, isn't it?
No, I'll tell you about enterprise software sales in a second. Trust me, it's a wild west. But anyway, selling to a government, it's just basically, if you have the best solution, there's no insane. As much as this is insane, what I'm going to tell you, there's no internal politics in government. I'm going to blow your minds. Right. Like, what did you just say? I kid you. Like in government, like it's very easy to, if you go to a branch of the military, you're going to talk to everybody in the supply chain, the general or the warehouse guys, like, and you're going to build the solution. It's going to be super simple. In a company, you're going to get blocked by the point of contact. He's not going to allow you to talk to anybody because of his own like little turf, and you're going to have to win him over. And if you can't, you're blocked at the gate. It's very, very different. Enterprise software sales is very, very hard. You guys should talk to Dominic Rinaldi. He sells software for VMware, and he's a Palantir bull. So you should get him on. He'll talk to you about the process of how it works. So what happened, this 1.75 billion to 2.2 billion shares that got issued after the DPO is, number one, salespeople came in, hundreds of them, and all of them got ESOP, obviously, because it's standard. And the other thing that happened that Alex Karp had a 10-year-old plan that ran from 2010 and 2011 up until the end of 2021 that expired.
Wait, his
To exercise- and-
compensation plan for him? You're saying?
Yes, it's a 10-year plan, 70 million shares. But it sounds a lot, but it's for 10 years of your life, motherfucker.
Yeah,
It's
yeah,
like-
Yeah.
And then he got a new one issued from 2021 that expires in 2031. And there's a big hit that happened in 2021 because of the Salesforce department and Alex Karp getting a new plan, and also Sham got a new plan, and Stephen Cohen got a new plan. So this little jump happened because of it. And if you see over the past 3 quarters, there's a continuous drop in the dilution and in the stock-based comp. Like for example, stock-based comp dropped 25% over the past quarter. That's alone. So it's now dying down, but the damage, the PR damage was already done.
Yeah. Well, to follow up, so why are you still so bullish?
Yeah,
You've said a couple of things that are like red flags for anyone who's seasoned, and you're much more seasoned than even us, right? So one was, I'll just point it out, that Karp is not a good speaker. Karp cannot tell us the message that he's trying to convey. It seems like he's the wrong guy as the CEO, and
I
they
didn't say
need
he's
to
a good
replace.
speaker.
Well,
I said-
let me
I
just
said-
ask you those things. But
Okay.
he's the wrong guy. And then number two, they're still diluting you, whether you say it's for this reason or that. So it seems like as a seasoned guy, you should be like, I should wait. I shouldn't buy anything right now. I should just wait.
Like,
a couple of
how,
years.
can you imagine Karp in a meeting? Can you imagine him in a meeting?
Oh my God, I wouldn't want to hear him at all. Yeah.
It's just incredibly
Okay.
inefficient. It would be inefficient.
I don't know how he's in private meetings. Don't forget that for a decade, he sold to the government a lot of projects that were onboarded. He created the partnership with Airbus, which was instrumental in creating Foundry, because the partnership, I don't know how much you're familiar with Skywise, which is the basis of how this whole thing got created. He made this happen. He's really good with top guys, like top government officials, top CEOs. Like but as far as talking to large crowd of retail investors, and like, you know how Warren Buffett feeds them with the spoon, he can't do that, bro. So he's up here. I don't think he's a bad public speaker. I just think he doesn't do a good job of simplifying things for, like, there were a lot of stuff they could have said in the meeting and they didn't, because I don't think, like, he assumes that this is the problem with super smart people. They assume you understand like basic stuff. For them, it's basic, but I had a professor like this. He was a Lehman Brothers guy, like before it collapsed. Or after, I don't remember.
All the
But he
smartest
was really
guys in the room.
No, he was actually good. But I couldn't understand the word he was saying because he was so like he would assume. So as for the question,
there's a lot of assume there's a lot
But
of
hold on, isn't that a problem? That's a problem with leadership. If you don't know
No.
who you're talking to, there's a problem with you as a leader.
look, you have to understand. Still, as far as results, so far he delivered results. The results are insane. So we're talking about presentation skills versus quality of the solution and the fundamentals. Let's look at the fundamentals of the company. They're insanely good. His results are like, look, they're guiding for 30% growth year over year until 2025.
They've missed that already, multiple quarters.
What they had grew 31% year over year the last quarter.
I think it was 26% this last quarter. Am I
No,
wrong?
31% revenue growth. No, that's incorrect.
Was it the government
they've-
thing that dropped off? I forgot which one it was. The government contracts dropped off, correct?
No, they grew by 16% government, 54% commercial. But that's
Well, I
because
think
they're
that's the
pivoting
problem. It
into
only
commercial.
grew 16% in government when it wasn't.
No, government contracts usually tend to get closed in the second and third quarter, usually of the year.
So
'Cause
you
the
expect
cycle-
it to go back to 30% plus.
Potentially, but they're pivoting into commercial anyways. That's the whole plan. So they grew 31% year over year, and they haven't missed guidance on the growth at all. So basically, so the results are there. Fundamentals are insane. The product is, from everything I know, talking to professionals in this field, their problem isn't the product. So you ask why still invested if the management is not good. I think that's a wrong assumption. I think the management is good. I think they need a better presentation as far as communicating to retail investors, Wall Street analysts. They need a better presentation strategy. Number one. Number two, I think they need a better sales strategy, because you have to understand that what you're seeing right now is just the beginning. So they grew US commercial by 136%, and their net dollar retention is 124%, which is really good. But I believe they can hit snowflake numbers, like 180% retention and significantly larger growth. the thing is, with Palantir is somewhat of a hybrid. So you have the government business, which is quite mature, and as you can see in the level of growth as well, 16% growth is kind of more of a mature business. And on the commercial side, they're growing 54% global, 136% US. So that's kind of startup level numbers. Why? Well, because the company is really like two different companies, if you think about it. So on the commercial side, which is kind of the product, just if you go back 2015, 2016, when they first started even talking about this, and then 2017, we actually started working on it with Skywise and Airbus. So this is like a 4-year solution, 5-year solution. So in this setup of a mature company and a kind of a startup, so you'll have a lot of stock-based comp. When you're trying to create new business, it's just going to be a part of the cost of doing business is getting good employees and getting them to stay, because with stock-based comp, your chances of tying somebody up, locking somebody up for the next 3 or 4 years or whatever the vesting is much higher than to pay him more money, because you're going to lose the bidding war. If you're going to try to outbid cash flow, the Googles, the Microsofts, the whatever, they're going to outbid you. As far as so that's the dilution part. And again, I think that you can see the decline in the amount of stock-based comp and the amount of dilution is declining. And I believe that you would also see enough of a decline for them to hit GAAP profitability by the end of this year, which is kind of your metric of how much stock, because the only thing preventing the company from getting to GAAP profitability is SBC. So once you see them cross that threshold, that's going to happen. The US enterprise software category is probably one of the most competitive categories globally in any industry, and it's just insanely good. And you have sharks, you have Microsoft, you have Google, you have all these sharks and that are basically experts at creating relationships and sustaining relationships. And I can tell you from firsthand source, for the company I used to work with, good thing I didn't say which one, we changed a CRM system from another very famous provider that may share the name. And then we used another one of these sharks I told you about, and it was 100 times worse. And it was so evident, so clear. It literally cost us hours of fumbling around with this new system, which was absolutely it was going like from a Ferrari to a horse, bro, literally. And so these sharks, the way they work is basically because they have ecosystems, they'll just, if there's a new competitor, they'll just tell you, well, use our stuff. It's not as good, but we'll give you like credits on 100 different stuff that we have in our ecosystem, and you basically, and they'll drive the other person out of business. And again, strategy has to get better, but at some point, there's a cost of not doing business with Palantir. So at some point, because you see, like, look at the test cases they have with Airbus. You look at the bottom line improvements that they did for Airbus. So, and I've spoken to employees on the supply chain of Airbus, suppliers, including airline employees within the network of Airbus, like clients that have their planes. Like they're all shareholders. They're all buying up like crazy.
You're saying it's like it gives them a fundamental competitive advantage.
Yeah, you see what it does and you're just blown away. So basically, at some point, there will be a cost of, wait, if I'm an IT guy and I'm not using this company or using this solution, basically I'm handicapping myself. So that has to happen, but it's a tough wall to breach, and it's probably going to take a few years. I mean, don't forget, like, they have all rookie salesmen. They're like, what, 1-2 years in, which is nothing. Like, look at Microsoft Salesforce, bro.
I did want to ask you about this. So you didn't answer this question though. Should Karp maybe step down and just maybe lead the board or maybe the product?
Why?
Leader? Because he can't communicate to the people everything you're trying to communicate right now.
That's not the main job of a CEO, in my opinion. He needs to
communication and marketing seems like it's one of their most important jobs.
No. Hold on. You assume a few things here. Communicating to investors is not his strong suit, but I don't think that's the desired quality. The only one I'm looking at in the CEO. You have to look at the results. Let's pull up the results for Palantir. Let's look at the growth. Let's look how much they're selling actually. I think as far as the results, fundamentally, the company is brilliant. The margins are insane.
Does Karp understand the business on that fundamental level? I mean, that's what.
Bro, he's been doing this for 17 years, and he's been the one thing you can say about.
But he's not a technical guy.
That's what I'm saying. Does he understand the tech? Like,
well, look.
Tell the guy, get up from the computer. Let me fix this, like Elon could.
Well, Steve Jobs wasn't an engineer. It doesn't really matter.
He had the
The,
was, but he had the was.
the idea is, look, he's I think he's a philosopher by education. I'm not really sure what
He
he is.
is a
Like
philosopher,
yeah.
German
yeah,
philosopher.
he's not an engineer, and you can see it in the way he speaks. But this would have been a problem if we pulled up the data for the past. Let's just go from the DPO onwards from October
Yeah.
2020. Let's pull out quarter by quarter, and I can show you insane numbers. Like, look, they have 80% margin on the software side, which is a clear indication this is not a consultancy business like some people claim. Their margins is 30% on operationals without SBC. The software is like the commercial side is growing like crazy. They've doubled customer count year over year in Q1 of 2022. I mean, what else do you want to ask from him to do as far as the business side of it?
So
I think he
you
just
think
needs
he's
to,
like a Steve Jobs? You think he's like a Steve Jobs where he's like the vision?
I don't know.
guy?
I think
push
Steve
it.
Jobs was a unicorn, bro. I don't know. Look in the full filing for the quarter, and they have an average of the top 20 customers. So top 20 customer average spend went up from 35 to 45 million over the past quarter. That's a 25% growth on your best customers. Like if your best customers are spending 25% more, and it's like millions of it's a high ticket item. That's not a popsicle. I mean, the dude is delivering.
Could the problem be that this is more niche than something like a Snowflake? That this is not for everybody. It's much more for bigger companies. So we're only talking about Fortune 500, Fortune 1000 companies, and it's really not meant for everybody. Like you were saying, there's no retail. There's no smaller companies that can do this. It's just for the big guys, and that's it. And that means it'll grow slower.
It's a cousin of what you said, not even a brother. I'll explain where the problem is. So as far as TAM, bro, enterprise software is a massive TAM. Massive
I agree.
TAM.
Yes.
I'm not concerned about that. The problem is what you said earlier. You have a good point. With Snowflake, it's really easy to create a fan base inside a company, and then to come in basically with a lot of support from internally. Because Palantir doesn't have this consumer stuff, or at least somewhat quasi-consumer product, there's nobody in the company. There's maybe like one guy there who's used it, and it's like, yeah, and then like there's 20 other guys in the IT department who have no fucking idea, so they're completely ambivalent. So until they create, and CodeStripe talk about it, until they create a community around it, it's going to be a very hard kind of uphill battle. With Snowflake, it's super easy because everybody knows Snowflake. Everybody's seen it. You can touch it. It's like they solve that problem. So they create a lot of kind of lobbying and evangelism from inside the companies where, and it's a low ticket item. Snowflake. It's not expensive. It's simple.
Well, I can go to Snowflake, and I'm not. By the way, my background's in engineering, but I can go to Snowflake. I can get a 30-day whatever free membership, try out Snowflake, see if it works for me. I don't like it. I don't use it. Go to Palantir. I can't even find out how do I log in. I mean, there's
that's
nowhere.
the main concern. Yeah,
I've written them twice.
Talk
Actually,
about
to
it.
try to talk to them.
How do I get into Palantir as someone just trying to test it out? You can't. You got to call them up, and you got to work out. They got to come to your location. I don't know what they got to do, but it seems like there's a lot more steps to the product than there is for something like a Snowflake or a Microsoft or an Azure, like we discussed.
Yeah, CodeStripe talked about it in his videos. He said that I think what he meant is that they don't have a freemium version.
Yes, exactly.
That's open to everybody. He said you have to have it, and he says he's really pissed off because like they have to, like he's very transparent with the way he talks about Palantir, even though he's a big fan. He'll criticize them, and he's been in my stream basically saying on the earnings. He said I told him it's a bad idea not to have a freemium version. You're basically handicapping your whole sales department.
To pivot to Tesla, I mean, I was going to ask, like, so when is that moment? Like we saw.
That's it. But I have more on
January
Palantir. We'll do it next time. We'll do it next time.
I just know you have limited time, so we want to get on at least Tesla with you.
Is this like a general open question? Yes.
Well, what's the question? Hold on. What's the question, Carlos?
Oh, man,
I don't know.
Okay, guys, if you're enjoying the Tom Nash interview, please like and subscribe, hit that bell, join our Discord, and join our Patreon. Now back to your scheduled programming.
What do you see coming up for us as Tesla investors? I mean, it's really starting to diverge now, especially with this Twitter acquisition. It's getting more like I'm personally very bullish, and I don't have any concerns about Tesla in the long term. But in the short term, I think we're going to be seeing much more volatility. What are you seeing, like the effect of, say, the Twitter acquisition and the FUD that's coming up around FSD, and it's in terms of the short to long term, 2 to 5 years?
Yeah, first of all, it seems like the Twitter deal might not even happen at this point. It's a very delicate question right now. So I don't know if you guys have been following, but
I have,
the,
yeah.
Yeah.
the Twitter deal might not happen. Who knows? I personally think that it will happen. Because he doesn't have a choice anymore.
Right.
Like
Right. He's kind of doubled
Well,
down.
he does. He can get out $1 billion and he's out. Right?
no, it's false. It's a misunderstanding by the media. It doesn't work like that. So I smell this from a mile away. He's just trying to leverage a better price. So the way he would do this right now, and I'm just guessing. Obviously, I don't have a. I mean, he liked my post once on Twitter. That's the maximum of my conversations with Elon. And I framed this on
He
my
didn't
wall,
hire
so-
me. By the way, he didn't hire me.
I would too. Honestly, I would too. If he that little heart, you kidding me?
Yeah, of course. So, anyways, so what I think he's doing is as follows. So I think that he's basically trying to. Okay, so if you want to get out of the deal, what you would do if I was your lawyer, and I'm not, but what you would do, you would try to say, okay, so this is not there's cause. You know how you have termination for cause, so you have to have cause like fraud, lies, something like major. So what the case is trying to build right now is basically saying, well, you guys told us you only have 5% bots, and we're gonna find out you have much more. Well, that's for you've defrauded us, blah 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 blah. So that he knows it's not gonna work. It's not gonna work because the idea, like,
Not going to work in
fraud-
what? Not going to work in what sense?
To get out.
because legally, in order to show that you have cause to get out, like it's a combination of fraud and material adverse effect. So you have to show that somebody defrauded you and it cost you a lot of money. Like, and the courts have been really adamant about something like that. It has to be like, the company's worth half of what it's worth. Like, it has to be something like you know what I mean? Like,
Yeah.
it has to be like Enron level of. Obviously, that's not the case here. If he finds 10% bots, I mean, it doesn't matter. But what he's trying to do is basically trying to scare them. He's basically saying, "Oh, I'm trying to get out of this," and he's basically saying, "I'm trying to get out of this. You're not even going to get the billion because I'm going to say it's fucking fraud." And I'm going to so he's trying to scare them, and then they have to make a decision saying, "Okay, so we have two options here. We can either sue this,
Which
is
they
going to
are.
cost
Which
us
they are.
The
what?
latest article, they're suing him.
They're suing him because of they're saying he violated a
They're not
NDA.
going to sue him. No, it's a PR war, bro. Nobody's going to sue him. So they can sue if this lawsuit. Nobody's suing him for the valuation. So what potentially they can do if he decides to work out is they can say, hey, okay, so we'll sue you for the entire 44 billion or whatever. I don't know, something crazy like this. So this is going to take probably like 15 years in courts, hundreds of millions of dollars in lawyer fees, and it's going to be a PR nightmare. It's the last thing Twitter needs right now. So they're not going to sue him for that. So he knows, they know that the share price realistically is now $22, $23, bro, in this market, which it wasn't when he made the bid. He was a little bit too early. He just waited another couple of weeks.
Right.
Yeah.
So he's like right now, he's sitting in a taxi on his way to JFK, and the traffic is congested as fuck. So now instead of the 45 minutes, it takes like 4 hours. So now the cabbie knows, and the guy knows their usual rate does not apply. So you have to pay extra. So he's the inverse of that right now. He's like, guys, I'm not gonna pay $54 for this.
Right.
It's like you can either try and sue me, and then we'll see you in 2045, or you can sell it to me at a better price. Let's renegotiate the price. And if you are the CEO of Twitter or the board or whatever it is, which solution seems better to you? Like, come on, like for the benefit of your share, because if you don't make the right decision, you're going to get sued by your shareholders, which is actually, I think that will happen. These shareholder lawsuits will happen, and they're going to be very painful. So they're probably going to say, well, look, if we let him back out of the deal, the share price tanks to the 20s. We cannot afford this legal battle. I mean, it's a bad idea. So he's just going to walk away and we're going to be back to square -1.
So he's buying it
Let's
at
just
42.20.
40. Exactly. He's going for that 420.
That would
Something
be
like that.
insane.
42.69.
44.20. 44 instead of 54.20. 44.20.
Maybe
42.69 a
42.69.
share. Yeah.
So-
44.69.
He's just trying to get some leverage so he can say, okay, let's do it at a cheaper price. That's the
Okay,
whole thing.
so
that's
as
going on.
Tesla investors, this sounds all horrific to me, by the way. I think this is
Yeah,
a waste of Elon's
This
time.
is not good for Tesla.
Yeah.
This
okay,
is
there you go.
there's no good spins for Tesla here, bro. This is why when the deal started to get shaky, Tesla
Tesla went up
spiked like
5%.
yeah, like crazy, because people like look, to be honest, buying Twitter is not a good deal for anybody. It's a company with really the stock didn't do nothing. But unlike Palantir, for example, which you have like a stock but a great company, it's a stock and a company. They haven't been monetizing this massive platform. Like, it's just garbage. I don't know why they have so many employees. It's just I don't understand none of this business. A lot of politics went into this a lot of nonsense, like banning former presidents and like stuff. Anyways, so not good business. Like, it's cheaper to build your own, and honestly, why would you? You have bigger fish to fry. So fuck that shit, right? But I mean, if you look in the history, Elon's modus operandi wasn't doing the best financial deals. If that was the case, he would have never invested in SpaceX or Tesla. I mean, Tesla and SpaceX, if you look at it in hindsight, like, it's great investments, right? But in real time, horrible investments. The fuck, bro?
They were long shots, yeah.
Long shots would be like a very generous way to describe how insane this was, bro. So
it's
he
like
has a history
crippled
of
horse.
Yeah,
right.
so it's kind of his thing, bro. That's what he does. So you cannot say, well, I want him to be Elon and everything that comes with it, but yeah, don't do like this. I mean, it's part of, being on board with him for this ride.
CEO exposure. They don't have any advertising, right? So this is bringing him even more into the center of the national conversation. I think that's a good thing for the company.
It will give him a lot of defense, in the sense like it's a good armor to have. Like, if especially when there's so much anti-Elon, anti-Tesla FUD.
Yep.
Look at today, Robert Reich, such a hypocrite, bro. Like writing about Elon again, bro. My guy, he paid $11 billion in tax.
Oh, I know. The Elizabeth Warren, the no taxes in 2018. Yes.
Yeah, he's finally selling his Tesla shares, tanking my stock, paying these taxes, and everyone's upset at him now.
I mean, as an investor, it artificially keeps the price low. But I think like
it's the same guys like Robert Reich. They would not go for the real money. I mean, there's plenty of money lying around, and he wants to look. You tax Elon for his wealth. Okay, no problem. Okay, how much do you want to tax him? 20%. Okay, so the guy is worth how much? Like 120 billion. So okay, here you go, $25 billion. Good. How about the rest of the 3 trillion you still don't have in order to pay for these extra interest rates hikes that you're gonna have to do right now? Their money is there. You can't fix it with Elon. The problem is that like the US has about easy trillion in just taxing properly estate tax, which they refuse to do because all these rich they don't want to pay. So why do we have an exemption? I want to ask Robert Reich, and why doesn't he speak about this, right? Why do we have a $12.5 million exemption for estate tax? Why? Why do I understand that if you do like $500,000, okay? $1 million. You know what? $1 million. No problem. If you amass the million, you want the first, no problem. Why do we exempt $12.5 million in estate tax? Why do we shield this? Why do we let these Martha's Vineyard get away with this tax evasion, right? It's legal fraud. And then on top of that, that's not even the worst of it. On top of that, you guys get me really triggered right now. On top of that, you have look at the numbers. So all these rich what they do, they don't even pay the amounts above 12.5 million because they just shove it in a trust or an LLC or whatever. And then when they pass away, the lawyer's like, oh, yep, it's not even theirs. It's in the trust. It didn't change hands. And then it never gets taxed because it always stays inside the trust. So the trust never dies. So there's no estate tax. If you look at the stats, in 2020, there were $800 billion of inheritances in the US. You know how much of these 800 billion was taxed? Under 1% of it was subject to tax. So under 1% at 40% tax rate. So 0.4% tax collected on 800 billion because they're rich and they don't want to pay and they own these politicians. And what about corporate tax? Like, you're going for Elon? No problem, bro. How about the fact that the OECD, which is the organization for the top 40 countries in the world, has the average is 40% of their tax comes from corporations. You know how much is in the US? I think it's like 15% or 20. It's half of the OECD. Why? Like in the US, 60% of tax comes from individuals. Yeah, I'm exaggerating, but like double than what the corporate is and inverse to what the OECD has, which is half the OECD. It's like you ask yourself a question and these that tell you, well, that's because we have LLCs and there's a lot of pass-through business income that goes to, they have that. It's called a partnership, bro. They have that in Europe. It's not a US thing, bro. There's a lot of plenty individuals who are taxed individually on business income in Europe. That's not a US thing. It's a lie. So why do we have that? Because we allow these corporations to shift income offshore. They'll go to different countries. They set up their HQ there. They set up. They say the IP belongs to this country, and then all they pay in the US some cost plus nonsense on some R&D center or marketing center, and like 90% of their business is taxed elsewhere. Why? Why do we allow that? Because they have a lobby. They have rich who they pay, and then they pay politicians, and then nobody does anything about that. It's easier to go after Elon because he doesn't have a lobby and he doesn't contribute to none of these.
But then don't you think that's a smart move on his part, understanding that like information is basically being weaponized?
Yeah.
Something like media and the effects of that are real, right? When there's FUD out, like FSD, every Tesla that crashes, it's all over the news, blah, blah, blah. Don't you see that as like a preemptive strike to say, I've got to have my own social media platform here because I've got to be able to combat some of this, because a few years from now, as they get bigger and some of these legacy OEMs start going under, you don't think that attacks are going to be even harder?
It's already happening. It's already happening. Look at what happened with GM and Biden and Mary Barra.
That's what I'm saying. So didn't you see that as like he's thinking like I've got to have?
I don't know what you're talking about. She did it.
She
and
did.
It mattered.
But look, all of these guys, like I don't think that again, I want to be clear. I don't think that Robert Reich is. I'm not saying this not to get sued. I don't think he's getting paid, or he's just they have their base. The base wants to hear this about Elon. Elizabeth Warren. So they know they get people rallied behind this concept. So they do it because Robert Reich, she wants more clout. Elizabeth Warren, she wants more clout. So they know that sells, so they do it. I don't think like they're getting paid to do it. But look at mainstream media right now. Like Tesla does a software update. Tesla recall, like the man.
Right,
like,
they call a software update a recall. So again, my question is, do you not see it as important that he has some like mouthpiece that he can combat?
He doesn't need to own it though, Carlos.
Yeah, doesn't need to pay 54 billion. I mean,
but he can get. But if he doesn't own it, he's subject.
Reddit and Twitter doesn't do it on their own when they call it out for free.
But don't you see that if they wanted to, right? If he doesn't own the company, Twitter could change their terms of services and say something that he said is going to get him deplatformed. If you deplatform Elon Musk, as you saw with Trump, you don't exist if you're not on Twitter.
Yeah, but they cannot deplatform their biggest star. He's literally their biggest user.
They got rid of Trump.
Trump wasn't as popular. Elon is basically Twitter, bro. I'm on Twitter just to read Elon.
Me too. Yeah, me too.
And
Bob Lucas.
The other part is, don't forget that Elon, like he doesn't. If he's still hands on to his 9%, he can probably wiggle in a board seat there. He has enough clout, so he can basically maintain some sort of a surveillance mechanism with the 9% as well. He doesn't need the whole thing. Like, look, you forget that Elon Musk is a great businessman and he's a really good allocator of capital to long shots. Like he would find the craziest idea, the third stringer on the Colin Kaepernick, right?
Yeah.
Like, and then he gets the Super Bowl. He did it with SpaceX, he did it with Tesla. So I think he says to himself, and for me, it kind of makes sense. Like, look, Twitter has such a big reach, and yet the money they make is like a bodega shop. Like, and it's like, we can really monetize the out of this if we just charge enterprise and we turn this into this money-making machine. Because what else is there? Nobody's on Facebook anymore. Instagram sucks. Like like TikTok is for kids mainly. I mean, for grown-ups, there's Reddit and Twitter. And Twitter is way more condensed. I mean, Reddit, if like these people like to type,
it's a rabbit hole.
On Twitter, is like I think he's seeing a money-making opportunity. Look, if I told you years ago that Tesla would be $1 trillion company, he makes 1 million cars. He has better margins than Toyota, GM, Ford. There's no automaker in the industry that has better margins than him. With 1 million cars, that's 1/10 of what Toyota makes.
Well, I want to pivot to the stock price then. So what is going to happen in your opinion? What are we looking at like January 2023? Are we still sitting in this hell of Tesla sort of heading down? Because it's in a downward channel. I don't know if you do any technical analysis, but we're looks like we're going down even further.
But that's the entire market though.
So where do you see happening just for the market and for Tesla in the next 6 months?
I'm not optimistic for the market short term, because like there's the entire market is going down because there's no good catalyst. Look at it this way. So
but they smashed delivery estimates and earnings. I'm saying two consecutive.
Brilliant. What's up right now? Which stock is up right now?
I know it's up. Costco's up.
Yeah, I mean, like real, like.
I think
no,
Coca-Cola's
right,
up, by
right.
the way. Coca-Cola's up.
No stock is up right now, but do you think that
I'm not talking about
down?
Chevron or like Occidental.
No,
like,
Costco is up. It's at like a
yeah.
48 PE. It's doing pretty
People
well.
want a lot of mayonnaise, I guess.
In tech, there's nobody's up right now. So I don't know about the specific share price. I think that cash, Tesla, and Palantir is the only things I want to have in my portfolio right now.
You have very
have
few
Google-
positions, right? You have very few positions.
Yeah,
really concentrated.
Google S&P 500, Tesla, Palantir, and FCX, which is my latest addition. It's a copper company. I think it's an EV play, by the way. I explained this in my video.
I did see that.
Anyway,
Yeah.
so to answer your question, Vitaly, so I almost switched to Russian, but when I say Vitaly, my brain went to Russian. I had to stop myself. So,
I'm gonna have to translate. Go ahead, you speak Russian. I'll translate. Покупай Tesla, пожалуйста. That means buy Tesla.
Okay. So check this out. So let's look at the macro. So on the one hand, you have obviously Russia, Ukraine. It's a thing which has massive impact. Most of it, which we haven't even felt yet. It's impacted already energy prices significantly. Russia and massive exporter of energy, both oil and gas. Look at the diesel prices right now. Look at energy prices. Crude is like 110 a barrel. So that's already impacted the market. The next cycle of wheat production in Ukraine, which is not happening, is going to be a big blow. You'll have wars in certain parts of the world where they rely almost exclusively on Ukrainian wheat. Like parts of the Arab world is like 100% Ukraine. So Russia, Ukraine export about 40% of the world's wheat. It's a major crisis, and wheat goes in cycles. So this would be really the time for the new cycle to begin. Obviously, nobody's sowing any wheat, and there's no way to export anything out of Ukraine. So that thing is still pending. It's still going to come. You haven't felt it yet. So as long as this persists, energy price is going to be high. And obviously, I mean, look, you look at I'm not a military analyst, but neither side can afford to lose. One side is fighting for their life. And clearly, I mean, bro, these guys, like Ukrainians, are beasts.
They won't give
I
up.
mean,
They won't
give up. I've never seen anything like this. It's insane. My heart goes out to them. So much respect. On the other hand, you have Putin, who literally cannot afford to lose, because if he loses, this is gonna be the end of him. He cannot afford to lose this. Now he has too many chips riding on this. If he backs out, he's done. So Russia, Ukraine would massive impact on metals, commodities, and energy is not going anywhere anytime soon. It's turning out to be a very long attrition war. So that's going to impact really severely on inflation, obviously. And on top of that, I don't know how long China stays locked down. Every day that they stay locked down, that's adding more backstops to this story. Because you have tens of millions of people out of commission, and the whole ports are backlogged, and factories and whatever. And so that's one aspect of it. On the other side of the matters, you essentially have this market that have become a junkie for cheap money, and now they're going through withdrawal because the Fed basically says, well, this probably will crash the economy, but we literally have no choice. The party is over. There's no more free money. There's no more cheap money. There's no more money, period, because we are in this state of really dangerous inflation. And I can tell you firsthand, because I was in Russia, unlike Vitaly, when inflation spiraled out of control, and you literally you lose everything. It's the end of civilization.
How long did it take? How long did it take from, say, when the onset of that runaway inflation to when basically all the value was gone?
It's like pandemic. 1 case, 10 cases, 1,000 cases, 100,000 cases, everybody's sick. It's like this. It's very different. It's like the speed. So when you say, "Oh, we're only at 8%," it's very misleading. The speed at which this could spiral, it's like a train accelerating.
So you don't think we're rolling over now? Inflation was a little bit lower than last month.
It's misleading. Look at the stuff that actually matter: the gas prices, the used cars, the stuff.
Yeah, but that's the energy. We're talking about the war that affected all the energy prices. I think the used cars have dropped and massively in terms of their.
I believe it was up still 22 or 23%. The used cars
for the year, or from last month, from the last time.
I don't remember, but in the individual categories, I think year over year was still up 22%.
Yes, I think year over year is up, but last month it's down.
Look, the thing
you don't
is,
think it's rolling over? Bottom line, you don't think it's rolling
how
over.
would this roll over? So the idea would be, okay, money supply is drying up, legitimate supply chain issues because of COVID, because of China, because of Russia, Ukraine, and you have America and rest of the world reopening, massive demand for everything and shortages, which creates price increases. You have a boiling hot wage inflation they're paying truckers what now 130 grand to get out and work. So your wage inflation actually adds more to this. So the idea would be, is there a way where this thing doesn't end in a hard landing for the Fed, right? Assuming they can even raise interest rates at all, because with this level of US national debt, I'm not even sure how far they can go with this. I mean, I think they're praying not to go, they doesn't have to go higher than, 2 or 3% because they literally would not be able to afford it. So it doesn't look like we're headed to a soft landing. So, and the idea is that how long can the stock market stay disconnected from the economy? Not very long. I mean, at some point they tend to converge. So I'm not very optimistic. So there has to be some sort of a positive catalyst in the pipeline. So how would we increase supply chains? If Russia and Ukraine ends in a way that allows a deal that would reopen everything with trading and relationships and whatnot, that would really be a positive catalyst. If China opens up, that would be a positive catalyst. The Fed cannot stop tightening, so that's just a given. So I see more pain, unfortunately, in the future. But again, I hope I'm wrong about this.
Well, no, I actually don't think you're wrong. I think these problems are difficult, and it's going to take many months or even possibly a year to play out.
Years. Two years.
So what happens to Tesla stock? It seems like I keep discussing with Carlos that I think there's going to be a quarter where Tesla misses, even if it's not their fault, and that quarter will be a bloodbath. That's what I think is going to happen eventually.
It's very hard for them to miss. Look at what happened. Like the China numbers came out. They did 11,000 cars in April.
We're pricing in 50% growth minimum now. What happens when they're at 40% growth for one quarter?
What do you think?
The only thing that would stop them would be supply chain shortages, because the demand is there. They have an easy hardline demand all the way to 3 million cars. That's kind of easy.
You're saying even with a recession in the United States, some of those orders aren't going to drop off?
It probably will have an impact, but they have such a big backlog. Like Justin is waiting for 8 months for his Model X.
I'm waiting for my Model Y.
I'm waiting for mine.
But let me tell you, as my bank account goes lower and lower.
Did you consider canceling? Would you cancel?
If the stock market is at a certain price, then I have a choice. Do I spend $50,000 on a car, or do I invest in Google, right? Isn't that the choice? Or more Tesla stock. So I might cancel for that very reason, that if everything is down and there's a bigger recession, I might rather have more Tesla stock than the car.
If the world goes into a global recession, obviously people will be buying less premium cars, which I think is where there's light premium. But that's kind of, I think, where you're heading in to a problem is to 3 to the 5 million demand. I think they can push 3 million out even with the recession. I don't think there should be a problem. If they can push out physically the cars, they would sell them. So barring any supply chain issues and shortages, I don't see them missing. Look, the margins are getting better. Like their margin improvement is just insane. It almost like that's why people, it's a fraud. Like, this Redditors, like, it can't be real.
That it's 31% or something?
You're not afraid of PE compression even for Tesla, for a high growth company?
Well, that's obviously always a risk. But Tesla has kind of broken the rules about it. There has never been a stock that's been so heavily retail top heavy that survived so long at the top. It seems that, and also had such an intelligent community. So it's not like this AMC, no offense to AMC or GME, people love them dearly, but
not an intelligent community. We heard it here first.
No, I didn't say that. By the way, there's some, the GME people, there's some really smart people over there. I forgot the name. They had a lawyer come in, West something, and I've seen some insane breakdowns. A lot of smart people in these communities. But I'm saying, like, the Tesla community has proven to be very efficient at pricing in future growth. And what would change? I mean, it's already retail heavy, so you might, like, usually when in the stock, when you have such a high retail participation, it's a warning sign. Like you see this in Palantir, because it just becomes, retail investors are really shaky. And so you see this insane volatility, not with Tesla really. I think that people it's just kind of it would depend on the strength of the community. I would just say that look at what happened with Twitter. One bad headline about the Twitter deal, boom, the stock is up 8% on a day or whatever it was. I think
that was institutional. I don't think that was retail buying that. I think that was institutions buying.
I think it's just yeah, for sure. But I just think it shows you the strength of the stock. Obviously, it's not immune to bullshit. But Carlos, you mentioned this, that as long as they can keep the results at this level, which I've never seen anything like this before in my life. A company that executes like this, the speed. I mean, they're going up against some like big hitters, and they're already like, as long as they can maintain this trajectory, at some point, like the price goes where you have to say, well, you know how many people ask me, well, Tom, if it goes like below, I'm going balls deep. Like there's a lot of demand for this stock, and the price at some point will get to a point where there's enough
The
retail
revenue
investors
keeps
to.
increasing, right? You know, Warren Redlick made a good point in his interview with Farzad about Tesla stock. He's saying there's a lot of, like you said, a lot of retail, but there are a lot of hodlers. So they're holding for such a long time
Yeah.
that they're not affecting the stock on a daily basis. It's really the short-term traders. And as the market cap increases and you have a lot of these long-term holders, it basically becomes undeniable.
So are you buying,
The-
Tom? That's really the question.
I bought on Friday.
I mean, we did. We bought all
Yeah.
last week. We've been buying.
I have a relative who owns. It was him and his two brothers. They're three brothers. They bought Tesla around 50, long time ago.
Yeah.
And one of the brothers cashed out once he 4x his money at 200.
Ooh.
And
Wait,
the
you-
other two brothers,
Nice.
Pre-split prices, you're saying, or the
yes, of course.
We were buying at 50.
50,
also.
right? 50, yeah.
Yeah. And basically, so the other guys, they're like still sitting on it. It's like, and the mentality is like when they were selling, they don't even check the price. Even like they don't even care. He sometimes asks me what the price is. I don't know.
You just
Do
don't
you
get
have a
that, like,
Tesla?
You don't
Do you
get
have a
that?
Tesla
What?
or a Tesla order? Cybertruck?
The car
Model
itself?
Y?
Yeah, do you own one?
No, I drive a 1997 Lada, bro. I don't drive a Tesla.
Oh, what?
A Lada Niva.
Oh.
It's the best car ever made. It will
yeah.
bring Tesla to its knees. I'm telling you right now.
Aren't they
It's a
bankrupt?
te-
Didn't
Maybe
they go
Elon
bankrupt
should buy
recently?
them and screw Twitter.
I read an article. They went bankrupt.
It doesn't matter. It doesn't
Because-
matter. It doesn't matter.
Because the
I
cars
hope
are
you didn't
so
have any
reliable,
stock.
right? The cars are so reliable, you never need
First
to
of
buy another
all,
one.
like you're kidding, but the Lada Nivas, Vitali doesn't know this because this is like too Americanized. But Lada Nivas are indestructible, bro. This is like there's nothing electronic in it. There's no power windows. There's nothing in it.
Are
There's
you
no.
still
it's
saying
all-
this?
the maximum
Start the
technology
car
you get.
outside by...
Well, I could tell Tom Nash all the money he's making. He's not going for a Tesla. He's
Yeah,
going to-
right.
No.
A Lada.
In Lada Niva, bro. Bro, the maximum technology you have in the Lada Niva, it's a little Jeep. It's the mud flaps. This is like a Soviet engineering,
Yeah, so
bro.
it lasts forever. At least one more topic or one question. I know you talked to Mark Frommeyer of FUV. I don't know if you remember that interview, but you had an interview maybe a year
Yeah,
ago.
I speak to him sometimes, even offline. He's a very smart guy.
So, well, my question to you is, did you ever invest in it, or what do you think about them now? Because they're going through some hard times, obviously, and we cover this on our channel a lot. Every stock
He's
is
such a
going through hard
nice
times.
guy. He's such a nice guy. His values are phenomenal. I was so impressed with Mark. As far as the companies look, it's a tough business. It's a tough business, and I think they're victims of just the production hell, scaling, macro. It's a perfect storm of bro. If he can come out of it, he's going to be stronger than ever. But it's going to test a lot of people. But this dude is legit. He's like super, super smart, and he's humble. Absolutely fell in love with him.
Who's coming out of it unscathed?
makes it
here?
on the
Is
other side,
Rivian,
yeah. It's like a
what other
Hunger
Canoe,
Games, right?
Arrival, all these EV players.
Arrival is a fart. It's a company that will never be anything, bro. Arrival is Nikola. Mark my words. Nothing.
Lucid?
Hot air.
Lucid,
Also hot air.
Lucid, Polestar.
Polestar is legit.
Rivian.
Yes. Maybe, yes.
Well, they have some...
Don't like
back
you
end
have to
of that.
disconnect them from the valuation. What works for Rivian again? Lordstown, this workhorse, Arrival, Nikola, all this fluff. Lucid is all trash. Rivian is doing something very smart. What's the best category for automakers in the US? It's trucks.
Yeah.
It's the best-selling category. Tesla is not in trucks.
Yet.
So it's wide open for the taking. Whoever comes out first with a amazing product at a reasonable price, which they don't have right now, the price is just bonkers, bro. The first like F-150 equivalent as far as performance and price is going to make a lot of money, bro. So by the way, I don't think it's going to be Ford because their idea of,
The F1.
God help them. God
Well,
help
they
them.
have the
fun.
Lightning, F-150
Yeah.
Lightning.
Have you driven one?
No,
I'd love
We'll
to.
drive one and then tell me how it feels.
it's not
It's
better
like-
than a Latka.
Just put bigger tires on that.
Bro, Rivian actually have a shot at the major chunk of the truck market for sure, and it's a really hot market. Nobody's in it yet.
So really, you're saying don't invest in anybody. only in Tesla. That's really the only EV manufacturer to invest in.
The only thing is that I'm just going cash, Tesla, Palantir. I'm not
Cash,
adding any
Tesla,
more position.
Palantir.
Yes.
No Google. Not adding Google.
I already have a big position in Google. I'm still in the S&P 500. I haven't sold, and I have a position in the copper company FCX.
Two things I just want to add to that, right? So Elon had a very recent interview where they asked him about this. Like, are you worried that you're not in the market yet, in the truck market? And that, you know, companies like Rivian have already come to market. And he said, I am not concerned with that. Like, basically, when we get in, he feels very confident that they'll dominate. And the second thing is that I've been thinking about recently is like,
They probably will.
I mean, like, they've already got what, 1 million something pre-orders. It's hard to know, but
Yeah.
like on Reddit, and that's more than Rivian. That's more than Rivian, from what I understand. And the
And
other
they
thing
can
is,
scale, which Rivian haven't yet
Right.
scaled ever.
the other thing I
That's
was
the
thinking
toughest
about is this environment, like in this recession, actually going to help Arcimoto as people want to move more towards micro mobility? Like, if you can't afford a Rivian, maybe you'll say, hey, maybe I'll pick up one of these FUVs. The number one most requested or the vehicle of theirs that people are most excited about is actually the flatbed. It's not the Deliverator. It's not the
You mean
flatbed.
the utility vehicle?
Utility, yeah. So I'm like, maybe this could actually be a good thing for Arcimoto if, you know, the entire
Yeah.
economy tanks and people go, look, I'm not going anywhere, right? And I don't want to spend $60, $70, $80,000
$100,000
or $100,000
electric truck.
if, you know, with or without a small tax incentive, an EV tax credit. It could actually be really good for Arcimoto. I don't know. Just wanted to know what your thoughts are on something like that.
Yeah. Look, if you're talking about like who uses these, like, I'm thinking about like farmers, right?
Mhm.
If you're a farmer and you use a utility vehicle, what's your number one concern? Maintenance and cost, right?
And the cost of diesel fuel right now.
Yeah.
or
So you're
gas.
not burning fuel, which is expensive, right? And there's no engine to maintain. There's no oil. There's no nothing. So maintenance is cheaper regardless of, and yeah, this might be a thing. Like, as energy prices go up as a utility vehicle, it's all about the bottom line, right?
Yeah.
It's reliable, it's cheap, and I just don't know about the size. Would it be like what? Like one of these? When I
Around
saw it the first time, I was like, I thought about power sports. That was my thinking. I was like, this, I have to have one of these. You know what I mean?
Yeah.
I really wanted one.
Yeah. It looks like
But
a lot of
this
fun.
might, but I mean, what you're saying might be a better path to profitability, or at least some sort of a cash flow for sure.
But there's no like $20,000 EV right now. We know that China is coming, but like they're shut
Yeah.
down.
Bro, it's
further
not
down the
easy
line.
to make a $20,000 EV. The scaling is not that simple.
Well, how much
It's
are the
not that
Solos?
simple.
I mean, Solo is trying, but you look at that vehicle and it's like I could not see myself driving in that thing.
It's worse than the Lada Niva. Have you ever, boys, have you ever seen like an actual Lada Niva?
No, bring one up.
Whoever has the host,
Let's bring
whoever
one
has
up.
the
How
host
do you
can
even
bring it up
spell
on the
that?
screen.
Oh my
Yeah.
god, this thing is a
It didn't
box.
change, bro. They
You know,
look
some of them
identical.
look better than others. Honestly, it looks like
Well-
a weird Jeep. Yeah.
Okay, so look, the one on the top left, that's the old version, the green one.
This one,
Okay.
right?
Yes. The one next to it is the brand new one. If you buy it today,
And it still has no power windows. Do
no power windows, nothing, absolutely nothing.
you have air
And it's-
conditioning?
Is it
It's
like
like
the Camry and the Corolla where like
There's like a little fan. There's a little fan you put
Bro,
is it like the Corolla and the Camry where like the parts are interchangeable for like 15
Yes.
years, right? They haven't changed. So you
Anybody
can
can
buy
fix it,
anyone
bro.
from a scrapyard,
Yes.
and that's part of what keeps them around.
Bro,
Right.
once you own one like
That's why they're
this,
bankrupt.
you would never want to another car. Especially like if you live in the country, you would not go back. It's so
Right.
it doesn't have a radio.
The turn signal is your arm out the
Right.
window.
Can you show like the internal, like how it looks from inside? So you guys see, I'm not even kidding. Can you show, like interior view? Yeah, look, it's very Spartan. There's nothing in it. I look at this and I see beauty, bro. They
I
do.
guess they're not going electric.
Mm,
90,000 pounds. It's not cheap. It's
Alright,
expensive.
20
But that's basically that's an Arcimoto. This is what I'm saying.
That's brand new
It's-
though, right? That's
Inflation, my guy.
Yeah,
Yeah.
inflation.
Are you still bullish on Bitcoin and crypto? And what do you think about all
Yes.
this? What is it? Just happened?
Okay.
The Luna scam.
Oh,
Yeah, Luna is I'm okay. So the way I see it is basically there's a spectrum of coins. I'm not a crypto expert. Justin, my partner, is way more bullish on crypto, and he knows all the little coins and everything, all the use cases. He goes to the conventions. Like he went through the winter and didn't sell a single coin. Like he had Bitcoin before 2017. He rode all the way down and he rode all the way up. He never sold. So he's a true kind of hodler. If you want to talk to him once, he's the smartest guy I know. So I see it as a much more simpler analysis. So there's a spectrum. On the one hand, you have Bitcoin, Ethereum, Cardano, Solana. You go down the list. There's use cases, the Polkadot, whatever it is. Like there's interesting use cases to every one of those. That's a little bit different. One's the store of value, the other one is a little more transactional, and et cetera, et cetera, et cetera, et cetera. And then you go down the list, and then you get to places like Luna. And Luna for me would be at the bottom of this. And my friend Kofazilla has talked about the issue with stable coins, especially algorithmic stable coins. It's basically there's flaws in this, which I don't understand. Now, I personally stay on this spectrum. I'm not looking for the 1,000%, 500, like the crazy crypto gains. I'm looking to stay Bitcoin, Ethereum, Cardano. That's my neighborhood. I live within these established, Solana or whatever. The established coins like first tier, second tier. That's it. I don't go anywhere further than that. Because for me, anything else is just there's too much uncertainty. Now, Luna, I think, is on the other hand of the spectrum. I never understood the idea of having an algorithm like a stable coin that's actually backed by physical dollars makes sense. And even that, I mean, there's issues with that. Obviously, Tether, you know the whole story, right? So with Luna, it's even worse than that. It's like my friend Patrick Boyle really defined this really well in his video. Watch Patrick's video. He says, okay, so it's one coin that's worth something that's dependent. Okay, so it's one coin they made up that's worth on the amount of value the other coin they made up is. And they keep selling them back to each other. And then right. Yeah, that's sort of like, and he's right. When he said it, I was like, oh, that's true.
That is right.
Like algorithmic stable coins. It's kind of an oxymoron. Cryptocurrency is an unstable investment by definition. Even though there's a lot of government pushback, obviously, because of loss of control, there's just too much advantages to having cryptocurrency as far as privacy, as far as ease of transactions, as far as the cost of transacting and sending money between peer-to-peer. I mean, there's blockchain in itself is an insane technology that can allow you smart contracts. It's like we've never had that before cryptocurrency. So there's a lot of things that are there will never go away. We cannot go back after we've seen like the internet. We cannot go back to fax machines. It's just too late. Yeah. Also, like, don't forget that the reason why governments will not try to kill cryptocurrency anymore, except for like craziness, like you have China is just unpredictable. But why the US would never try and kill crypto? Because at this point, the governments, at least in the West, took a position. Basically, they had a choice how to classify crypto. Is it an asset or a currency, right? Immediately, also, it's an asset.
Yeah,
that's a knee-jerk reaction because they wanted the tax profit. If you say it's an asset, then you can tax every exchange of assets is a taxable transaction, right? So once they've and I think that was wrong. I think it's a currency and should not be taxed. I mean, it's not an asset.
Germany, right? And Germany just came out and said you can sell.
But the vast majority of countries, there's other countries who took this approach. But in the US and the vast majority of countries, and US leads, like whatever US does, everybody follows suit. It's an asset, and as such, there's a big, it's a big revenue driver for the IRS and the other tax authorities. So going after that essentially would mean hurting their own tax revenue, which I think they won't do at this point. They would love to have their own, but it's too late to kill it. They might want to compete with it, maybe. But I'm extremely bullish.
That was my question. Like, does this thing with Luna destroy like the inevitable bank issued stable coins? Like, is now everyone just going to be sort of risk off on any of these? The idea of a stable coin in general.
I don't know. It's a good question. It really. I said this. I made a quick video about it. Basically, I said, "Hey, it's a 3-minute video. I know nothing what I'm talking about here. Absolutely no idea about this."
Car?
No. It was about Luna. It's like, I called it the $40 billion disaster. So all I said in this video is like the collapse because algorithm stablecoins don't work, even though they're innovative. And all I said is like, if they ever fix this trust issue, it's like when you have spousal trust issues over cheating. It takes years. If honestly, not even ever. Honestly, not even forever. Like once you had, it's very hard to come back. So they need years of trust building developments to get some of the people trust back, which I don't think they can. But let's see. There's a lot of believers in Luna. There's a big community of people who believe in.
There's people buying back. There's people buying back in now, hoping it's
There's
not.
people still
Look,
trying to ride that.
They're saying the same thing about me. This idiot buying Palantir. Like, you know, they're like, I mean,
You know, Palantir has cash flows. I'd rather buy Palantir
Right.
than Luna, trying to ride that back.
Right.
I don't know. I just not my sort of thing. I think when I look at Bitcoin, I see an incredible store of value with this never going away. Ethereum has its benefits. All these other coins. I don't know who's going to come out. I don't think. I don't think it's going to be like a binary result where one winner takes it all. There's an ecosystem of these cryptocurrencies. I generally do not understand algorithmic stable coins.
Nobody does. Don't worry.
It's not. I've never been interested in it at all, so I don't care.
What's the percentage of your portfolio actually in crypto? And are you buying the dip?
Yeah, you dip buying?
Well, I bought it after our show on Thursday with Justin because we talked after the show and he bought some more and I bought some more. I honestly don't know what to tell you. Because I've never really. I have my equities broken down to percentages. I've never measured them versus Bitcoin.
Oh, in terms of like-
But it's a smaller position than your equities.
I have 6 figures in it, if that helps you, but the small 6 figures, not anything like crazy. By the way, you know why you buy the dip? Like why I specifically bought the dip on Thursday?
Why?
Is because I said this on the show also. If you look at the way Bitcoin behaves post crashes, it tends to come back faster than the equities market. If there's a good catalyst coming, so it seems to bounce back faster than the market.
But there is no good catalyst, right? Because the interest rates might be still going up. We still have these problems with supply chains and everything. Wouldn't it be? I'm thinking it's going to get hit harder. That's what I think. Me and Carlos on that page.
Maybe.
You just did a video.
But I mean,
we're putting it up. Yeah.
That's a really good question. Nobody really knows. It's the thing about it is like if you take this kind of bet and it goes down, you still have the long-term play with Bitcoin, and so you don't. It's a bet, and obviously you want it to go up right away. But
it's the 5-year, 10-year bet.
Yeah, so you can always fall back on that. And it's a finite. Look, it's a finite supply, by definition. It's not like fiat money. You can't just make infinite amount of Bitcoin, and that's a.
But Ethereum, you can, by the way. Ethereum is not a finite supply.
Right.
It's an infinite supply, and it keeps getting printed. So I'm a bull on Ethereum, but at least I admit that, you know?
Yeah. Well, most of mine is in Bitcoin. I would say like close to 90% in Bitcoin. I don't understand the other coins. It's like I have small positions in the other ones, but I have a friend, Jeff, who explained to me about Cardano. I have Justin explained. I'm not a. I'm a very if you can say like a crypto boomer. So I'm a crypto boomer. Yeah, I just like Bitcoin. I absolutely love the idea of electronic store of value. And even though people say, "Oh, look, it's not an inflation hedge," it's like, my guy, you're screaming this after 3 or 4 days or a week or two. Let's give it a year or two. Let's see what happens in the year.
No, look back a couple of years.
Cap.
Of course, it's an inflation hedge.
Because people are like, "Oh, look at how correlated it is to equities." Yeah. And okay, it's correlated.
Market cap, though. That's a function of market cap. I mean, gold is a store of value because the market cap is just so.
I think
high.
gold is a horrible inflation hedge. By the way, it's a myth.
Well, store of value. This is why it doesn't move as much, is because it just takes such a tremendous amount of money. But I mean, the whole crypto market now is what, 1.5 trillion. I mean, Bitcoin was almost that by itself.
Yeah.
And why is gold bad? I wanted you to finish that. Why is gold not good to have?
It's a complicated answer, but essentially it's been really overhyped as an inflation hedge. I think if you look at the numbers of how gold is priced over the past few years and go back to crises in history, there's a big community of people who try to sell this idea. So where gold, the collapse. Gold has been tangled into these doom and gloomers of the collapse of the US, the reserve currency, all this nonsense is never going to happen. If you really don't care about liquidity and you're looking for a good inflation hedge, either be a gold trader or just buy real estate. I mean, there's no
real estate is the best inflation.
What gold does better than real estate in inflation? Tell me.
No, actually, you're right. And real estate has boomed forever.
Well, you have trouble finding a good deal in real estate, but if you can find a good deal, I mean, the underlying asset, gold versus real estate and inflation, I mean,
Well, one is
there's
productive, one is not. That's a big difference too. So
another,
back to the
yeah.
Warren Buffett. Yeah.
Completely switching gears. Elon Master Plan 3.
What the is that?
It's
You never heard of the master
No,
plan?
no.
he
Oh,
announced
really?
he's going to have his third one. So basically, the first one was make a high end car, use that money to make a more affordable car, use that money to make an even more affordable car. That was the
Oh,
Model
that
S.
theory I'm familiar with, but I didn't know you call it the master plan.
He called it the master plan, and then he had the second.
Okay.
Then he had the second master plan. I think it was in, wasn't it, in 2018. This is all tied to his CEO compensation plan. So now that he's exercised that from the 2018, now he's coming out with the third one, and there's a lot of speculation. Rob Mauer did some stuff on that. It's going to be all AI, or it's going to be about the
It
bot.
probably will be.
Workforce.
I talked to Dave about this. Dave said that this is going to be the next big wave for Tesla. The AGI is where he actually laid out. We did a whole interview where for 45 minutes he explained why there's no competitors for Tesla and AGI. There's so much data, and I think that's what it's. I think Dave is right. Such a clear path, right? Look at how much data he's gathering.
50
And,
billion miles. They have 50.
Yeah,
50
nobody
billion
comes
miles
close
already.
to this shit, bro.
So
Nobody
wait, is
comes
your bull
close.
case that the robo taxis and AGI and robots happen, or is your bull case no, they just sell a lot of cars?
So I value Tesla at $1,500 per share, and it's been like that for a long time. And my valuation technique is basically look at the stuff they already have in the market and use a DCF valuation model to try and assume very conservative growth for the next 5 years and bring back cash flows at 10%. So no Cybertruck, no robotaxis, no energy business, just straight up cars. So if you wanted some, so to be super bullish, people don't. When I say 1,500, it's just the auto business as it stands today. If it just keeps making money, so if you add in more of these bricks, who knows? But I tend to value things based on what I can see already in the market, not on future products. I don't
Yeah,
know.
no, I like that. I actually prefer that. I agree with you.
The margin on these cars, I mean, it's really like, look at it this way. The one thing I do have is FSD, because like I think Tesla, the brilliance of what he did right now, they're going to be the first auto manufacturer with the massive SaaS income with 80% margin and scalability, 0% production costs, right? Like it's insane. Imagine an auto company with SaaS model at a couple $100, whatever a year, whatever it's going to be. The price will come down on FSD. It's going to be something affordable. And then it's basically on top of like, I think that it's headed to the, he's reinventing everything. So when I say 1,500, it's just the cars plus FSD.
You're making me
I think
want
the
to
margins on that will be
Monday.
insane. Well, look, it's always. I think it's always a good idea to buy more Tesla. I think I've been very clear about this. The one thing I will tell you is like I find it amusing how Elon Musk sells shares to exercise options, and everybody understands in the Tesla community why he doesn't really sell shares. And then in the Palantir community, the same thing happens. Alex Karp options expire on December 3rd, 2021. He sells, it's a 10-year plan. He sells everything before the expiration date. The entire Palantir community is like whining, like, oh, he sold, like he's dumping shares. And then like $1 billion, like he had $1.75 billion worth of options, which he exercised after it's a 10-year grant. It's an $800 million
bill. Elon made
bill.
me a 20x. Yeah, but to fight back, Elon made me a 20x on my stock, so I'm okay if he sells a little bit. Palantir hasn't done that yet. They haven't made the 20x for the shareholders.
No, but
The retail ones at least.
Yes, but how long has Tesla been public? They just went
Since
DPO in
2009,
2020. They've been public 2 years. Look, all I'm saying is that even CNBC did a whole piece about it, showing, oh, Palantir insiders sold $1 billion worth of stock at the height of the price. It's option exercises. These are forced sales to pay tax. I mean, you have to pay almost 50% tax on. It's not capital gains on options. It's income tax. So with state tax and everything, so it's almost it's literally people exercising, selling to exercise and paying the tax bill. Nobody's selling any shares, and yet I don't know why it was. That's the strength of Tesla community, the ease in which this thing was explained, and everybody got it. And I see how it doesn't really work in another community, which really annoys the living out of me.
That's why I sold my Palantir.
Well, then.
Thanks for watching, guys.
Tom, we appreciate you coming on, of course.
Yeah,
So
seriously.
thank you for
Seriously.
giving
It's
us
been a
more
blast.
time. We appreciate that.
Yeah, seriously.
No,
we
it
went
was
way over.
the conversation was free flowing. I didn't want to interrupt in the middle. And somebody has to edit my video now. I'm 1 hour late to my own edit.
Sorry, man.
Yeah.
Oh, it was fun.
Coming up soon, we have an interview with Mark Frohnmeyer. We also have an interview with Dave from We Build San Diego. He's a solar installer on the front lines, and we're just trying to get more of our end phase confirmation bias tickled. Seriously, really appreciate it. It was good to meet you and talk to you. Had a lot of fun, and hopefully we can do it again.